Hello and welcome to this ID Video Market Report Special Edition, where we'll review what's happened so far in 2014 and how it's been affecting industrial distributors. In part 2 of this series, we'll look forward to the second half and tell you what you can expect to influence business operations in your marketplace.
First off, the economy. At the start of the year, economists were optimistic, many suggesting a 3% growth rate instead of the 2% growth we've been stuck at for the past 2 years. Unfortunately, these growth rates are being slashed in June, and the IMF has said that the U.S. economy would only grow 2% this year, down from its earlier forecast of 2.8%.
So what's the problem? Believe it or not, many are still blaming the lackluster year on the harsh winter. Everyone from Walmart to the White House threw the polar vortex under the bus, citing lowered productivity and revenues during the months-long stretch of enormous snowfalls and below-average temperatures.
According to a report earlier in the year by AP Markets writer Ken Sweet, merger and acquisition executives predicted a pickup in deal activity for a couple of years given the bull market and economic recovery. But what prevented the really big transactions was uncertainty about the federal budget, the debt ceiling, and the fate of Obama's Affordable Care Act. With those issues resolved, at least for now, the way has opened up for bigger and more complex deals.
American companies announced 1,550 deals in the first 2 months of 2014, according to DealLogic. While that is down from the last 2 years, the average transaction size is more than double what it was a year ago. Additionally, global deal volume for the full first quarter was at $992 billion, according to Bloomberg, making it the biggest quarter for M&A since 2007.
On the industrial distribution side, there were countless mergers and acquisitions. Some of the most notable so far this year include Motion Industries' Canada arm, which closed a deal in February for the $100 million bearing and PT distributor CSI, headquartered in Edmonton, Alberta. Additionally, Motion's parent company, Genuine Parts, has announced a handful of its own acquisitions so far this year.
Oil and gas has been a busy marketplace, and with good reason, including GHX's acquisition of Hose Specialty and Supply in June. In addition, Applied looks to expand its footprint in oil and gas with the acquisition of Knox Oilfield Supply, Reliance Industrial Products, and Texas Oil Patch Services so far this year.
Kaman has been busy completing the acquisition of the $100 million tri-motion distributor of Parker Hannifin and other products, B.W. Rogers Company, in April. The biggest news on the supply side was Blackstone's purchase of industrial products maker Gates Corporation for $5.4 billion.
Additionally, there were rumblings about Annixter being in the market for a buyer, with rumors swirling at one point that this buyer could be Rexel. According to Bloomberg Businessweek, this courtship fizzled out, likely due to Annixter seeking offers about 13% higher than the current share prices.
Amazon has been busy as usual, rolling out everything from same-day grocery delivery to now even a 3D phone enabled for point-and-click purchasing. But it's Amazon Supply, the B2B arm that Amazon quietly rolled out 2 years ago in beta, that has many industrial distributors still shaking in their boots. According to Forbes, since the launch, Amazon Supply's product offering has grown to more than 2.2 million, covering 17 product categories from tools and home improvement to janitorial supplies, stocking everything from 12 packs of Hawaiian Punch to Schedule 40 stainless steel pipe. Industry experts estimate that the company stocks more than 50% of what it offers on the site at any given time.
Google has followed Amazon's lead, and just as quietly, with Google Shopping for suppliers to accommodate the unique aspects of B2B selling that has limited supplier participation on Google Shopping. It's also been estimated that eBay has been gaining ground on Amazon, and that the online powerhouse currently sells $2 billion per year in business and industrial merchandise.
So what's ahead for distribution in the second half of the year? Join us tomorrow, where we'll look into the future to identify the critical factors that will shape the business landscape for the remainder of 2014 and beyond.
And for more late and breaking news, opinions, and analysis, find us on the web at www.inddist.com. Thanks for joining us.